Welcome to AGORACOM Talks, your weekly go-to source for the best small-cap headlines for over 65 million investors since 2007. We are scanning the wires right now for the most compelling small-cap headlines and the hard numbers behind them. We aren't just reading titles today. We are doing a deep dive into the data to see if these companies are actually backing up their claims.
Yeah, it is definitely a hard asset kind of week. We have hard rock gold results that frankly defy the statistical odds, and hard data on AI profitability that actually backs up all the recent hype.
Exactly. So let's get right into the dirt with the mining and resources sector. First up, Goliath Resources Limited, ticker GOT on the venture. Their headline claims the Shrewbet discovery is, quote, reports exceptional gold drill results, reinforcing Shrewbet is one of British Columbia's most significant discoveries. That is a very heavy title to claim. Yeah. Do the numbers actually hold up, or is this just standard junior mining promotion?
I mean, the numbers are honestly freakish. They just wrapped the 2025 campaign, and the headline data point is 100% hit rate. They drilled 110 holes, and 110 holes hit mineralization.
Wait, 100% hit rate?
Yeah, 100%.
In exploration, that usually implies someone is, cherry-picking data or just drilling in a sandbox.
You would think so, but the drill logs are totally public. They found visible gold in 83 of those holes.
Wow.
Right? But the standout that validates that significant discovery claim is hole GD25337. We are talking 10.83 grams per ton gold equivalent over 22.82 meters.
Okay, nearly 23 meters of high grade. That is not a narrow vein, that is a highway.
Exactly. When you have that kind of width and grade, it changes the geological model entirely.
From we hope it's here to we know exactly where it's going. So staying in gold, but moving east to Quebec, let's look at Lafleur Minerals, LFLR on the CSE. Their headline, advances Beacon Gold Mill restart as gold prices soar. With gold trading above $4,900 an ounce, restarting a mill seems like an absolute no-brainer.
It is, but the smart money angle here isn't just the gold price, it's the infrastructure.
Because permitting takes forever.
Precisely. You can find gold anywhere, but permitting a mill to process it takes years of red tape. Lafleur already has the mill in Val-d'Or.
Right, but a mill is completely useless without rocks to feed it. Did they actually release any data on the supply side?
Yeah, that is the second half of the news release. They highlighted the Swanson gold deposit with an intercept of 2.05 grams per ton gold over a massive 158.25 meters.
Over 158 meters, that is huge scale.
It proves they have the bulk tonnage to actually feed the beast. They aren't just an explorer hoping for a buyout, they are building a real production pipeline.
Okay, let's pivot to the future tech side of the desk. Industrial innovation. HPQ Silicon, HPQ on the venture. Their headline is, hits commercial milestone with first purchase order for fumed silica. But I have to play devil's advocate here.
Go for it.
The order is for 50 kilograms.
I know, 50 kilos sounds like a gym weight.
Yeah, exactly. Why is the market caring about a backpack's worth of silica?
Because in material science, 50 kilos is a commercial test run. Fumed silica is a thickener used in everything from batteries to sealants to tires, but making it is usually a really dirty, hazardous process.
And HPQ does it clean.
Right. Their fumed silica reactor does it without hazardous chemicals and with a low carbon footprint. This purchase order proves a client is willing to pay for that clean version. It's the critical move from lab science to commercial revenue.
Speaking of revenue, let's look at Nextech3D.ai, ticker NTAR on the CSE. The headline posts 59% revenue growth and record 95% gross margins. But in the AI space, revenue is vanity, profit is sanity. Is this just cash burn growth?
That is where they shocked me. That 95% gross margin figure is what you really need to look at.
95%. That is basically pure profit on every dollar of sales.
It really validates their pivot. They moved to an AI-first model for event tech. When you have 95% margins, it means your cost of delivery is almost zero. They are scaling up revenue while significantly slashing operating losses.
So it's the difference between AI hype and actual AI execution.
Exactly right.
Very impressive. So let's wrap this deep dive with clean tech financials. Zefiro Methane Corp, ZEFI, on Cboe Canada. Their headline, delivers record revenue and profitability.
This is a perfect example of regulatory tailwinds in action. Quarterly revenue is up 34% to over $10.1 million. But again, look at the bottom line.
Let me guess, adjusted EBITDA.
Over $1.1 million.
Wait, so they are actually generating positive cash.
2 quarters in a row now. They've proven that capturing methane isn't just some regulatory emissions tax you pay to the government. It is a highly profitable business model on its own.
It is a fascinating spread this week. You have Goliath hitting 100% on drill holes and Nextech hitting 95% on margins. The common thread here seems to be pure execution.
Absolutely. The market is completely done paying for blue sky potential. They are paying for real results you can actually put on a balance sheet.